Welcome to TradeTheNBA.com. This is John. This report is for the 9th. I've had to rebuild my charts from the TS, so it will look a little different. I don't quite yet have all my resistance lines from our previous algo levels, but I have to go back through previous videos and start marking all of that and then figure out some of the adjustments to the charts to make them look correct. But it gives us a general view of what's going on. And after we had the spike up here of the magenta moving back above the 25, sort of stalled here a little bit. We've got the orange spike, and shorts have been jumping back in once we got back up to that same level above the 61% here. And I think you're going to get more of that. We still don't have a whole lot of short activity. So at best, you've got bulls that are going to have to push the situation kind of past our period of new fund money, which is what was perfect timing for the generation of the return uh, back up here. They got a nice discount on that, and it's definitely helped the shakeout. But the problem is now you've got to see the shakeout move positive here in the next day or so, because if it doesn't, that is definitely going to lead to more selling coming back through, and that would not be a surprise to see. From an NQ standpoint, you're already at the 100%. So again, we've always talked about this. The NASDAQ had been leading most of this and is continuing to do so from a much stronger position. But you do see the beginnings of a spike, still 6.8. That's not enough. We've got to be in the 9 category for it to be of significant magnitude to actually have an impact. But again, you're gonna, you then go down to the DOC. You look at short-term buyers starting to fade, and shorts rising. So a crossover of the cyan to the steel here coming lower, that would also put downside pressure. But I mean, really, is it significant? You're already at peak level, so having some movement in between there, normal. And we could be set for this kind of a trading range for a little while. I mean, you'd have to have some kind of impetus to push it. And this is where the problem is. Now, I always mention this was a ridiculous move for the bond market here, lowering rates, because the Fed's doing just the opposite. So it was like a lose money situation and starting to revert back to what would be normal. In fact, normal would be closer to sub 100, even less. But it puts pressure on the market, because if your return doesn't exceed what you're getting from treasuries, why would you be in risk assets when you can be in the relative safety of a U.S. government with 30 trillion in debt payments? No comment from that. Oil back in the low 70s here. This volatility of movement, not the greatest thing. You really want to see some kind of stabilization in a trading range, and potentially could get resistance here at 50%, but you still got magenta rising. I need to see pivot lower on that to help stabilize it to the downside. And what to me is interesting is when you see treasuries, you get the situation with oil, and then you have the bank setup. What you've got is credit tightening in that, and whether that extends um, into people's abilities to purchase on credit, and that going forward is going to be an interesting one, particularly even when it comes to oil and things. If you can't charge your gas, or if you're living, in that space of, having to use credit in order to survive, which we know is an increasingly large population, and we saw credit card debt skyrocket in this last reporting period, and whether that continues, it'll be an interesting one. Is the Fed, quietly providing liquidity on that issue? Well, from a bank standpoint, certainly loaning on credit cards is an ideal situation compared to commercial real estate, home loans, or anything like that, because the spread is so great. Obviously, your risks are higher, but do they really feel at risk these days? Doesn't seem like it. Euro just softening a tiny bit. Nothing dramatic. I mean, just holding right in that sweet zone, which was 107, 111 range I had, moving all the way up to the high side of 114. But it's an interesting one, because if you have the banking crisis growing in the U.S., it will be catastrophic if it spreads across. And we've already seen it with Credit Suisse and that. And yes, governments are going to do whatever they can to bail them out, but if it starts to snowball, becomes really a contagion they just have no answer to, because none of these banks have any ability to maneuver, because they've all been buying these bonds from the government at extraordinarily low rates. So unless the government's willing to just take them back and return par, what else are they going to do? I mean, and that's kind of the equivalent of what's taking place with some of this excess liquidity facilities that the Fed has been providing worldwide, not just in the U.S. From a gold standpoint, that's going to be a net positive for gold. It's going to be a net positive for cryptos, though. Bitcoin, just when they solve the things with the SBF, then you get Binance doing their little freeze out. They've got to get their act together. It just creates so much uncertainty, and no different than a bank. You have a concern that your money is not going to be secure. You're not going to be able to liquidate when you want. It's a frightening proposition. So yeah, when they lock people out, even for a brief period of time, it threatens your security, because it suggests at any time you could be SOL, and that's not really a position you want to be in if you have large sums. And of course, that just forces people to diversify further, which creates more volatility in a lot of situations when you have it en masse. Um, Same situation, they're suffering from ETH, and actually ETH is a little worse for the wear on that one, with the readings and the MBI spike quite. I still have to get my headers to pop back up on the indicators and figure out what that one. And 50K chart, yeah, 50K chart finally. I'm able to get the 5K up, but the 50K, so get that nice move. Now we can see positive extremes, worth noting, right to there, and basically we've now just filled them in the pre-market. And it's the beauty of those. There are a couple of others that took place back over here, but they were already filled by that. And the original breakout one would take us all the way back down to the 50% mark on selling. But literally all you've got is both shorts and longs. Shorts really not jumping into this strong, and you just have some softening from a long standpoint. Strong DOC spread, so I mean, the reading was good from that standpoint, as well as you could see higher highs, lower shakeout. That's always a clear indication. It's just usually sometimes with that you just have to wait for the clean DOC spread. In this case, when it first started revealing itself with the lower shakeout, you had that little spike that took you back to the peak, but completely spidered again there, and then broke out strong to the negative side, filling that back in. So that's the long and the short of it for now. I'm working on getting the 5K. I just have to rebuild the space and start over, and hopefully that will work, and see if I'm able to save these. So we'll go from there. But as always, trade well. We'll talk to you later.